Earlier in the day, our country's Finance Minister Nirmala Sitharaman presented the 2022 Union Budget. This budget was a highly awaited one as it came at a very crucial time with the looming threat of COVID's third wave, elections coming up in 5 states, the economy going through a stop-start recovery, and of course key statistics around inflation, fiscal deficit, tax collection and spending. The Finance Minister termed this budget as a blueprint for the next 25 years. And so in this video, we shall examine the key highlights of this year's budgets with some commentary on how any or all of the provisions discussed might have an impact on our country, its people and the economy. Let's begin. The fiscal deficit was always going to be a key number in this budget. And pleasantly, the Finance Minister decided not to tighten the screws and continue to encourage spending in a bid to support growth. The budget projected a fiscal deficit of 6.4% of the GDP for the year 2022-23, with the aim of taking it down to 4.5% by FY26. In that context, an expenditure of 39.45 lakh crores has been planned for the upcoming financial year with an estimated revenue intake of 22.84 lakh crores. Now, generally, it's the revenue which is always the big question mark in these estimations. But in what seemed to be a little theatrical, our Finance Minister did declare that January's gross GST collection of 1,40,000 crores was the highest ever since inception, which shows the economy is recovering well from the COVID crisis. The budget also offered a credit extension of 1 lakh crores to state governments, which was over and above the normal borrowings that the states are allowed. These funds will be made available via 50-year interest-free loans, which the states can use to further their development work. By offering this credit extension, it seems the central government is giving a message that there is no paucity of money and the time has come for everyone to focus on growth and advancement. A relief in taxes is what the middle class expects from every budget. Unfortunately, this year's budget had nothing concrete on that front, with the personal income tax structure maintaining its status quo. What the Finance Minister did introduce was a new provision that was aimed at voluntary tax filing, allowing taxpayers to file an updated tax return within 2 years of the assessment year, an increase in NPS deduction on employers' contribution from 10% to 14% for state government employees, and a capping of surcharge on long-term capital gains at 15% for unlisted assets from a previous tiered structure that could go as high as 37%. So these were some of the smaller highlights under the taxation front. But the budget provision that stole the show is the now introduced taxation on virtual digital assets. You see, until now, there was no clarity on how to tax cryptocurrencies or NFTs, that is, the non-fungible tokens. But now, a 30% tax is chargeable on any income generated from the sale of such digital assets. Furthermore, a 1% TDS needs to be paid. There are no deductions available for incidental expenses like brokerage, and the budget provisions doesn't allow investors to set off gains against other losses. But if we read this information in a different way, it does tell us that the Indian government recognizes that cryptocurrencies and other virtual digital assets are here to stay, and the government's focus will not be on banning them, but in regulating them in order to prevent their misuse. The budget also announced that the Reserve Bank of India is coming up with a digital currency using blockchain technology, which shall be rolled out in the coming financial year. Of course, this stems from the government's mission to achieve financial inclusion, and a digital rupee is a step in that direction as it not only reduces the inefficiencies of handling physical cash, but it also accelerates the shift towards a cashless society. In addition to the introduction of a digital currency, the Finance Minister also announced that all 1,50,000 post offices in India shall be connected to the core banking system. This interoperability across branches, mobile banking, ATMs, etc. will be of immense help to farmers, women and senior citizens in rural areas and will certainly spruce up the government's financial inclusion efforts. This budget, like the previous budget and the one before that, reiterated its focus on public investments to modernize the country's infrastructure. The chief execution vehicle for this will be the PM Gati Shakti Master Plan and its 7 identified focus areas in the form of roads, railways, airports, ports, mass transport, waterways and logistical infrastructure. Under this massive initiative, the government is looking to expand the national highway by 25,000 kilometers in 2022-23, for which an outlay of 20,000 crores has been assigned. The initiative also aims to manufacture 400 new generation Vande Bharat trains in the next 3 years, 100 cargo terminals by 2025, and contracts for laying optical fiber lines in villages, which will be awarded under the BharatNet project in the coming year. The budget also announced that the 5G spectrum auctions will be conducted in 2022 and further introduced a production-linked incentive scheme for design-led manufacturing as a part of the 5G ecosystem. This is expected to not only enable affordable broadband and mobile services across the country, including rural India, but will also promote research and development initiatives and commercialization of technology and value-added solutions. The 2022 budget had a number of big and small benefits for the farming community. There was a domestic scheme aimed at reducing our dependence on oilseed imports, a fund with blended capital to finance agriculture startups, assistance from the railways to develop infrastructure for small farmers, promotion of chemical-free natural farming in India, and 2.37 lakh crores worth of MSP direct payments to be made to farmers across the country for grain procurement. The budget also encouraged the use of Kisan drones for crop assessment, digitization of land records, and the spraying of pesticides, which not only improves productivity and efficiency, but given the quantum of arable land in India, it can open up a new industry in itself with employment to thousands of people. Other than the infrastructure push in railways and national highways that we mentioned earlier, the budget also introduced a battery swapping policy. This policy will bring forth interoperability standards, which will be a big catalyst for electrical vehicles and the entire EV ecosystem. The automobile sector is one of the biggest employers in the country, and our government's thrust towards promoting EVs as an ecosystem is likely to attract loads of private and even public capital expenditure, which augurs well for the country. The 2022 budget spoke greatly of having a self-reliant defense sector. And with the geopolitical risks that the world is facing today, this ought to be taken up on a war footing. To equip this, the finance minister has earmarked 25% of India's defense R&D budget to private industry, startups and the academia, which is a welcome move. Further, the private sector will be encouraged to take up the design and development of military platforms and equipment in collaboration with the DRDO and other organizations, which is likely to immensely accelerate the process. Pleasantly, 68% of this year's Defence Service Capital Procurement budget has been earmarked for domestic companies, which bodes well for our PSU and private defence companies. The generation of employment for our youths and citizens has been a top priority for this government and others before this. And in spite of the disappointments, there's always and will always be an eye trained on this. In that context, the finance minister in a speech said that the government's PLI schemes across 14 sectors has the potential to create 60 lakh new jobs over the next 5 years. The budget has also extended the ECLGS, or the Emergency Credit Line Guarantee Scheme, until March of 2023 and has also extended the guaranteed cover by an additional 50,000 crores. This extension in period and amount will be a lifeline to the MSMEs and the hospitality industry, which has been the hardest hit due to COVID. In fact, for MSMEs, the budget also focused on the interlinking of portables like Udyam, eShram, Aseem, etc. through a unified logistics interface platform, and to also provide real-time databases that can improve credit facilitation and enhance opportunities for entrepreneurs. Further, the budget also announced the launch of a digital ecosystem that will focus on skilling, reskilling and upskilling citizens through online training that will not only make them more employable, but will also set the path for more value-added work to be done out of India. For the financial year 2022-23, the government is stepping up its capital expenditure to 7.5 lakh crores, which is a good 2 lakh crores higher as compared to the previous financial year. This capex of 7.5 crores comes to about 2.9% of the country's GDP, and with this, the effective capex comes to a massive 10.7 lakh crores. In addition to the increase in capex, the finance minister also reiterated the impending public issue of the Life Insurance Corporation of India, the replacement of the Special Economic Zones Act with a new legislation, and amendments to the bankruptcy code, which is expected to speed up the resolution process and bring down the winding up of companies from the current 2 years to just 6 months. Okay, health first, and this budget mentioned two important initiatives to that effect. The first one is the rolling out of a national digital health ecosystem, which will consist of digital registries of health providers, a unique health identity, and will equip universal access to health facilities for the citizens of our country. A second initiative on the health front is the launch of a national tele-mental health program for mental health counseling across 23 centers around the country. With regards to housing, the budget allotted a sum of 48,000 crores to the PM Awas Yojana, under which 80 lakh houses will be completed in rural and urban areas. Additionally, the budget has also allocated 60,000 crores for providing 3.8 crore households access to tap water, which in my opinion should be a fundamental right for every citizen. From an education standpoint, the finance minister announced that a digital university will be launched soon, and that the One Class, One TV channel program of PM eVidya will be expanded from the current 12 to 200 TV channels. This clear focus on education and the announcement of dedicated TV channels is expected to see a growing demand in education technology and in content development. And finally, the budget expressed the government's intention to launch sovereign green bonds as part of the government's borrowing program for FY23. These funds will be used for public sector projects which will help reduce the country's carbon emissions. The 2022 budget was certainly not a populist one. After all, no additional money or freebies were doled out, which was a bit of a surprise, at least to me, given the fact that the elections were due in a few months. But what did impress us was the government's thrust on expenditure and its clarity on the area it wanted to focus on. Infrastructure, MSMEs, renewables, rural, 5G, financial inclusion, startups, digital rupee, skilling, employment and agriculture were the focus areas, and these are expected to be the backbone of India's economy for the next decade. In essence, this budget was not created to do anything for the stock markets, but was developed keeping in mind the real economy that lives, works and breathes in our farms, factories, hotels, hospitals, etc. Well, that's our opinion, but we want to hear from you as well. So do let us know what you thought about this year's budget by writing it in the comments box below. If you found this video useful, then do tap on that like button, share this video with your friends, and I look forward to catching up with you on another video on the ET Money YouTube channel. Until then.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.